Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Welcome to the U.S. Market Update. The S&P 500 pulled back on Tuesday, weighed down by NVIDIA shares and a broad decline in tech stocks. The broad market S&P 500 lost a shade under 0.6%, closing at 6,411, while the Nasdaq Composite fell 1.46% to settle at 21,315. The Dow Jones Industrial Average, meanwhile, added 10.45 points, 0.02%, just a marginal increase, ending at 44,922. Shares of mega-cap tech and big-name chip makers declined. NVIDIA shares lost 3.5%, while AMD and Broadcom slipped 5.4% and 3.6% respectively. Shares of high-flying software stock Palantir also dropped more than 9%, making it the S&P 500's worst performer. Other major tech-related names such as Tesla, Meta Platforms, and Netflix were also under pressure. To understand why this big sell-off has transpired, we have on the line now Nadine Terman, CEO and CIO of Solstein Capital. Nadine, welcome back to the show.
Hi, thank you for having me. Good morning.
Good morning. Good morning. Let's touch on that massive sell-off. Well, what's going on over there?
Sure. So you noted it right. Basically, there's gains of 350 companies in the S&P 500 that were up, but it was really the big tech weakness that dragged the index down by 59 basis points. So NVIDIA was down 3.5%, and that really drove the sell-off, which obviously was felt more in the NASDAQ, which was down minus 1.46%. So people are saying with the NASDAQ trading at 27 times forward earnings, any weakness in big tech is really a cause for concern. And that's why you saw NASDAQ down so hard.
On the flip side, Nadine, Intel popped in the news of Softbank's investment, as well as a possible equity stake by the U.S. government of 10%. Your initial thoughts on that? Is it relief for Intel given the events of last week when U.S. President Donald Trump and members of his cabinet met Intel's chief executive, Lip-Bu Tan, and he actually called for Mr. Tan to resign after accusing him of being highly conflicted due to his earlier ties with China. What do you make of the latest developments?
Well, I think you've seen a lot of flip-flopping or deals being done, if you want to call it. I think of it as, we can get into Apple in a second, but if you remember, the CEO went and then visited Donald Trump in the White House, and all of a sudden President Trump said that he's doing an okay job. So I think that was probably the precursor to Softbank putting in $2 billion for a 2% stake, and then the government saying, hey, we might be able to, and it was done at just a slight discount to the prior close, and then the government coming in. So it's going to shore up a U.S. company, and obviously I think the CEO gets a little bit of relief as well.
Yeah, globally, Intel has lost out to rival chip manufacturers like Samsung and TSMC. How do you think this development may change the dynamics of its competition?
I think that it's a message saying that the current administration is going to back U.S. companies, right, if they do what they want them to do. So just as I'm going to make a parallel to Apple. If you remember, Tim Cook and Apple got in a lot of trouble because they were manufacturing in India. You know, the Donald Trump administration didn't like it. And then, obviously, there's been a lot of meetings between Apple executives and the administration, and all of a sudden, lots of good things are happening for Apple. They're no longer going to be forced to provide a backdoor for U.S. users' data to the U.K. government, which is a big deal. And then also, Apple is boosting its iPhone manufacturing in India. So the complete opposite of what they were in trouble for is being encouraged. It's a move to reduce the reliance on China. So they must have gotten approval from administration. So all 4 versions of the soon-to-launch iPhone generation is going to be made in India, and that's the first time that that's happened from the start.
Yeah, speaking of China, if you recall last week, NVIDIA and AMD agreed to pay the U.S. government 15% of their Chinese revenues as part of an unprecedented deal to secure export licenses to China. So some analysts are actually concerned that this potential 10% stake by the U.S. government in Intel, if it goes through, might set a dangerous precedent because companies may be forced to follow political agendas. What do you think on that note?
Well, I think that's a personal question. I think there's not a precedent to answer that in terms of how it would turn into a result. So you have to be really careful because there are shareholders who have a vote too. So I think that this is going to end up probably in the court system and not for you and I to decide. I have a feeling it's going to end up shareholders coming in as well as obviously boards of directors and administration. So I think that this is going to get tied up for a while.
Yeah, I'm sure we haven't heard the end of this story just yet. Let's shift gears a little bit and talk about some retail earnings that have come in. Home Depot, which provides a pretty big read on the consumer and housing market, their shares edged a bit lower initially, but they rose 3% after they maintained their full year outlook. That being said, they reported weaker than expected Q2 earnings. Your thoughts on that as well as what's to come, including Lowe's, Walmart, and Target, which are all on deck for later this week?
That's right. It's a big week for retail here in the U.S. I think the key item is that Home Depot's same-store sales rose in each month of the quarter. So that gave bulls a little bit of a place to hang their hats. And the company really needs rate cuts, though, to unlock the housing market. And I think people are hoping that the Jackson Hole meeting later this week, when Powell talks, will give some dovish signs that could be unlocking some potential opportunities there. And I think people also felt comfortable that management kept their guidance. But just like you said, you've got Walmart, which I think is going to be one of the biggest, the most important reads this week for the consumer, as well as Target. Target has its own issues, though, and so it's in a bit of a turnaround. So it may be less about the consumer and more about Target. But obviously Lowe's, I imagine, is going to follow Home Depot. But Walmart was important, and then today Toll Brothers, which is more of a luxury builder here in the U.S., they missed their estimates. So I think that that is a little bit of a cause for concern for people, especially looking at the housing market. So unless rates come down, especially at the long end, people are wondering, how is this going to work?
Yeah, we'll get to rates in a minute, but will these earnings results give us additional data points on the tariff impact as well?
I think they give you initial data points, but the second half of the year is really where you're going to see the data come through in the numbers. So the Q&A of management, especially on Walmart, I think is going to be absolutely critical because they're going to tell you what's to come, not what happened. What happened is in the past, but if you know that shipping has to happen quarters in advance, especially for the holiday season. So we'll have to learn about inventory management, cash flow management, stocking the shelves, their supply, breadth of supply. So there's going to be a lot of data points that they're going to talk about, in addition to the bifurcation of the customer, higher-end customer, lower-end customers. Are they paying with credit? Are they paying, how are they paying for this? So it's one of the best reads outside of Amazon, I think, on the health of the consumer here in the U.S.
All right, let's get back to the Jackson Hole Conference, which is set to kick off on Friday. Fed Chair Jerome Powell will be hosting his final conference as Fed Chair. Traders betting on a September cut. Do you see that being a unanimous decision, given that there were two dissenters last time around during the last Fed meeting?
It looks like that is a clear decision that'll be made. And then the question is, could there actually be two rate cuts? And that's going to depend, I think, on labor data as we continue to see weakness in labor. So whether that's through hourly wages or unemployment benefit, we're going to have one more read beforehand. And I think that any kind of labor data is going to have a big impact on, would you actually see more than expected? I think that's the hope going in after today. You saw some bets of people saying, well, maybe it could be over 25 basis points. I don't think anyone thinks it's zero. So that would certainly be a shock to the market. If there was no cut, I don't think that that's expected at all. So now I think it's really between one cut or something more.
All right, Nadine, thank you so much for your time. We will be hotly anticipating that Jackson Hole Conference on Friday, as well as Fed Chair Jerome Powell's speech. Appreciate your time and insights.
Thank you so much. Have a great day.
You too. That was Nadine Terman, CEO and CIO of Solstein Capital, and you're listening to Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.